If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
All right, everyone, welcome back to another live stream. Good morning, good afternoon, wherever you are in the world. Thanks for being here. We've got this morning, we've got unemployment claims data coming out. We are also trading the aftermath of what looks like a little bit of de-escalation, at least so far, in the situation with Iran, which I know is another kind of geopolitical tension area right now. We did see a big drop in oil price, down 3% today. Take a look at this. You had a huge drop, and this came off or came out basically when Trump made a tweet that seemed, or a post on his Truth Social post, basically saying that there were less likely chances of the U.S. going into Iran or doing something, where there was a lot of people who were like, you know, before that, thinking, okay, that's pretty imminent. The U.S. could get involved. And then there was the post. So you can see huge drop in oil price, down 3% here today, and continues to be dropping as we speak. This morning we have unemployment claims. We'll see if that moves markets. Somebody asked, is this high impact news? And the answer is, with almost all news or economic data, the answer is it depends. Because if unemployment claims come in a wildly different than expected outcome or number, then yes, it could be high impact news. Just like an NFP report can be very high impact news, or it can be not really a big mover. Like the other day, on Tuesday, we had CPI, and CPI didn't really move the market very much because, well, here's why. If we go to our asset scorecard here, it didn't really move the market very much because it came in exactly as expected. You can see our surprise column was 0. So when CPI came out this week, it came out in a way that was completely in line with what the market had expected to happen. So what you have to understand about news is it's only as market moving as it is surprising. If a news or a piece of data or an announcement comes out that is very off from what people had expected, that's where you get big moves happening in the markets. So same thing today. We are, if we zoom down here a little bit, today we will be getting the weekly jobless claims. And the previous reported number, we had 208,000 unemployment claims, compared to the forecasted 210,000. So that was pretty minimal surprise. So we'll see what the data brings here today, if it causes any shakeup or stir on what is going on in markets. And, you know, so far right now, I've got a pretty neutral view on indices. I do want to talk about some crowd sentiment that I'm seeing right now. Basically, without getting too far into it, crowd sentiment's really pretty bullish in terms of a bigger picture view. If I just pull up my crowd sentiment AAII investor sentiment survey, I did post about this in our Telegram channel this morning. Take a look at this. You have some of the most bullish outlook in terms of crowd sentiment that you have had in many months. So what we can see here is bulls are very, very kind of confident. The people feel that the market is very bullish, forward-looking. And so when you get everybody kind of thinking, hey, the crowd, or hey, the stock market's going to keep going up, when everybody kind of thinks that, I do get a bit nervous about investing or even being long stocks. Now, I do own stocks, many stocks for the long term, and that's a little bit different of a scenario than from a trading perspective. From a trading perspective, when we're looking at indices, I would definitely say I'm a little bit more on the defensive or cautious side of things right now. I am not short the stock market. I have no interest in shorting the stock market. But I definitely think that there are, in my personal opinion, it's better to wait for a little bit of a dip or look for an opportunity for lower prices. I don't know if we're going to get that. If we do, it'd be great. If we don't, then so be it. I've got other trades that I'm, taking advantage of, like the precious metals here. I'm still riding that on the long side. Look at this. Silver's down 4% today. Doesn't even look like it. Like, this is such a crazy move from silver that a 4% move down doesn't really look like much, which is just absolutely crazy. Actually, look at this. At one point today, we were down 7.5%. That is crazy. The moves are just wild on silver. Someone asked, how can I make a payment plan on the EdgeFinder? Yeah, if you would like to set up a payment plan, it's pretty easy to do, but the easiest way is just to send a direct message to our support staff on our website. We'll drop a link here in the chat for you if you need to set up a payment plan. If you're interested in getting access to EdgeFinder, you just need a plan so that you can afford it today. All good. We've got a way for you to send a direct message using that link that just got dropped in the live stream chat. Another easy way to speak to us, if you can't click the link very easily or you just would prefer to go to the site, head over to a1trading.com. You can explore the EdgeFinder here. And if you want to chat with our team, click there. You can speak with a real person on our staff by messaging in with our live stream chat or our live chat box. So yeah, that's an easy way to get connected to a real person on our team and set up a payment plan. If you're interested in EdgeFinder, you just don't want to pay the full price today. We do offer that, and our team is happy to help with it. Buy or sell on gold, anything on gold. Everybody's interested in gold here, it seems like. Look, so I say this, I have done this. I've been streaming since 2018. Since 2018, since I started streaming, almost every day, somebody comes into the streams to say, should I buy and sell or should I sell gold? And I'm not trying to pick on you, but please, I'm trying to reason with you. If you're going around live streams and saying, should I buy or should I sell XYZ? Please do not trade a real account. Pause. If you are taking your trading seriously, this is not a playground, right? This is not a casino. I mean, it is a casino for most people, but if you want to actually make money in trading, you are not going to get there by asking streamers or people or traders who, even people who have experience. Nobody can tell you with certainty what gold is going to do in the next 30 minutes. Okay. We can have educated guesses, but even an educated guess, let's say the best traders might be able to give you like a 55 to 60% chance of being correct on which direction it's going to move, but nobody knows with certainty. So the reason I'm responding to that comment, and I think people are memeing on me now, which is totally fine. The question of should I buy, should I sell gold? The problem with that question is that you don't actually have a strategy as to what is helping you to guide which way you should be trading and how you're going to manage that trade. If you're just saying, should I buy, should I sell? Look, I can tell you, first of all, I don't know where gold's going to go in the next 30 minutes. I don't trade based on that. I trade, the daily time frame. I'm a trend follower. I trail stop loss, and I don't try and make huge predictions. But here's the thing. If I'm looking at gold and I'm thinking it's generally, in my view, going to continue to move higher, if that is my perception, that's not enough of we don't have enough to go off of there. Okay, I think gold's going to keep going. So what? You just buy full port, and if it doesn't go up, then you blow your account. That's not like how you trade the markets like a business. If you're going to treat this thing like a professional trader would, if you're going to take this stuff seriously, you actually have to go back test and build systems in a hypothetical environment, like a back tested simulation environment, and test that strategy that you have. Okay, so a simple strategy. Let's say you buy dips of 2% or more on gold. Go test that. How does that work out? Where do you need to put your stop loss so that you can control risk when you're wrong? What size of a trade should you put on when you take a trade as to make sure your drawdowns are sustainable, right? If you're risking too much per trade and you have a losing streak, you're going to blow up if you don't, test this stuff. So just do yourself a big favor, save yourself a lot of money. Do not wander around live streams or social media, watch a video and say, oh, well, so-and-so is bearish on the NASDAQ. I'm going to go short the NASDAQ, right? That's not a strategy. There's no context there. This is what a trade looks like, okay? A trade looks like, all right, I have tested 1,000 times this same entry on a technical chart, historically speaking. Generally, it produces a decent result overall. I know that my stop loss should be XYZ distance. I know that I'm going to manage a trade in XYZ way. I'm going to either trail stops using market structure, using a 10-day moving average or 10-period moving average. I'm going to size my trade this way so that when I hit this losing streak of 7 trades in a row that I lose, which is inevitable or whatever, this is what I'm saying. If you don't do all of these things, you're not going to make money in trading. You're going to lose it. Even if I told you the right answer, because I don't know, right? Nobody knows. If I tell you I think gold's going to keep going up today and it goes up today, great. You still haven't learned anything. Tomorrow, you're going to come back and say, should I sell or buy gold? And then let's say I get it wrong tomorrow and you blow your account. Nick was wrong, right? That there's no framework there. There's no consistency, no strategy, no longevity there. You're just running around the casino asking random drunk people if you should put it on red or black, right? That's not going to end well. So please be careful. I don't know if any of that made sense, but please, there's a lot of great people in these live stream chats, a lot of really dedicated traders. Listen to what they're saying. I'm seeing some really great commentary. What do you guys think? Help me in on this. If somebody's running around saying, should I buy, should I sell? What do you say to that person, right? The biggest thing I can tell you is trading is way harder than you think it is. Nobody, not even the pros, knows where gold is going to go with perfection in the next 30 minutes. That is, I remember believing that when I first got started in trading. It is so far from the truth. Anyways, S&P 500, NASDAQ are both having really good pushes here to the upside. Take a look. NAS is up 1% today. I wonder if that is also in response to the geopolitical stuff that we had, right? Trump kind of issuing that there's less probability of the U.S. involvement in Iran, causing oil price to shoot lower, down 3%. That is in some ways a tailwind for U.S. equities, obviously, because cooler inflation off of cooler oil prices. That's the idea. Stop trading, period. That's the best answer. Become a professional backtester before starting to trade. That right there, Belfast Tiger, my friend, that's the answer. 110% agree. When I first got started trading, and I don't want to miss my news here, so I'll come right back to your comment in just a second. Unemployment claims coming out in 10 seconds. Let's see if it moves markets. Usually doesn't have a huge impact, but it could. So let's see if we get any surprises here. Unemployment claims coming in here. Expecting 215,000 claims this week. Let's see what we get. Still says pending. Philly Fed Manufacturing Index came in higher than expected. Okay, still pending here. Let's see if we get a market reaction. Nothing too big here. See what the dollar's doing today. Dollar continues to move higher. It tells me your claims might have come in a little bit better than expected, but the data is still pending on there. Yeah, look at that. Unemployment claims moving the dollar index a little higher. We're still waiting on the number here on Forex Factory. Yeah, look at that. Dollar index is moving higher. Gold and silver making a little bit of a push lower here. Let's see. Not sure. It's still pending. What's up, Chris?
Hey, good morning.
Good morning. Waiting on this unemployment claims numbers not showing up, but I'm just going to go off the chart here. Dollar index moving higher. That tells you probably a better than expected unemployment claims. There it is, 198K. So better than expected jobs data. So probably expecting dollar higher and probably yields higher as well. There you go. So that's actually kind of a surprise on the unemployment claims. It's a big enough weekly claims change to move markets here a little bit. So kind of interesting to see that. And also, of course, the oil price dropping here this morning seems to be giving a little bit of a boost to equities market, who was a little bit worried about the geopolitics last night. Chris, they postponed the Supreme Court thing again.
2 for 2.
Yeah, what's that all about? And
I actually dropped an F word yesterday and in my live session. I'm just like, then don't put it in the news. If you're gonna do it, get it out of the way and we can deal with it, or do it after the market so we can come into the day to let it digest. But don't say and then do nothing twice in a row. It's like it was last Friday, it was yesterday, which tells me it's probably going to happen again. To go back to what we're looking at for gap wise today as well, check TSM if you got the screen. Oh, I've got the screen here. I'll go TSM. I think it's up like 30 something percent.
Really?
Yeah. Look at that. So we were up. We were. I think it's faded a little bit, but TSM up about 5. Was that? I think it beat earnings by 35%. Hang on a second.
Gotcha. Okay.
So
like
we've got
insane.
Yeah, Nasdaq gaining 0.8%. Dow's up. Futures up. All futures are rising. We've got chip makers, AI-related stocks led pre-market gains. Taiwan Semiconductors, as TSM reported better than expected, 35% jump in Q4 profit. There it is. So
got it.
Profit jumped 35%. Nvidia rose, 0.9. That's a big one for Nvidia. $4.5 trillion company, up almost 1%. Micron, which has been just crushing already year to date, up 3%. Applied Materials surge 8. Lam Research 7.7. Bank earnings, JPM was down a little bit, but I did not get a fill on JPM like I wanted. I've got a pending order on JPM. I've got a couple alerts coming today for John Deere and Company. Caterpillar and John Deere are getting some full depreciation write-offs on all their equipment. So I think that's going to be a tailwind for them. Also structurally, I mean, they've been a pretty strong trend. And then Progressive Insurance, I've got a nice little trade on that as well. Today I want to actually look at some IBIT. I was a little skeptical of IBIT, but now that we've kind of shown a little bit more of a promising base, I'm looking to sell some puts on IBIT down into the 30s and to hopefully collect some income for the year. So look for that in poll rulers this week. Goldman Sachs, big banks again. JPM had a slight miss. Goldman Sachs, creeping up towards $1,000. We've got shares up almost 1%. Morgan Stanley. So I mean, this is good. Like you want strong financials kind of lead us into earnings season. We'll have some tech coming in next week. Nick, I do have some levels going into today, tomorrow. If you just take a look at this dashboard, seeing this up here in green is encouraging because it just shows that our short-term flows are pushing, likely going to just kind of push the market back into the drift, and also kind of pulling out geopolitically, saying that we're not necessarily going to take action in Iran right away. The market's kind of liking that right now as well. So nice little tech-led rally that's dragging everybody higher. I think 7,000 is pretty gettable. That seems to be like a sticky spot and a round number that we just missed, man. 69.86. So see if we can get back to it this week.
Yeah. No, that's interesting. And then Chris, I've got our weekly. We do this every Thursday. We've got some sentiment analysis here coming in this morning. Crowd sentiment is pretty bullish out there.
Oh boy, that's almost too bullish.
5%. And AAII investor sentiment survey for people who are not super familiar. Chris and I look at this every week. It's just an interesting way to gauge what investors are feeling about forward, returns of the stock market. And interestingly, they typically get it wrong. So out of the 6 months ahead, they are saying essentially almost 50% of respondents are saying they feel outright bullish on the market, with just 28% approximately saying they feel bearish. If we scroll down, you can see bullish sentiment has been on the rise. Of course, typically it does rise as the stock market rises. We also see bearish sentiment hitting a pretty low point here as well. And then just to follow up with this, because I think it's also important that when we talk about something like that, we also take a look at what that historically actually means for us as traders. And it doesn't guarantee anything, right?
Right.
because this is all averages and stats. But I think this is worth pointing out that when AAII investor sentiment is bullish above 45%, which is relevant right now, after studying 284 different instances where we got this, the 1 day average return, 1 week average, 1 month, 6 month, and 12 month all look historically not super great, especially in the shorter run, the next like 1 month out. It basically says you get flat to slightly down in terms of forward-looking returns. It doesn't tell you, hey, here's a huge sell signal or anything like that, but you have to weigh this into your analysis. And again, it just kind of goes to show, it reiterates the general thinking of like when everyone gets bullish, the potential upside kind of gets hit down a little bit, and when everyone's bearish, there's potentially a little bit more upside. So again, no all absolute conclusions there, but just thought it was worth mentioning as we get close to that 7,000 level.
Sure. And just don't be surprised if this market, based on the low from November, that big November 20th sell off, we've been making higher highs, pullbacks, higher highs, pullbacks. They are getting smaller and smaller. I'm just going to throw out a couple price action scenarios. If we continue to see, let's say we hit a new high again, Nick, we probably tap that 7,000 handle. If we see 7,000 with some momentum, we could be talking hundreds of points to the upside. But if we see just a poke of 7,000 and then a big fat reversal candle, then we're probably going to pull back again to this 50-period moving average. I'm still, this isn't like, the oh my gosh, I think gold's going to pull back to the 200-day moving average. But hitting a 50 period, it's been supportive since April of last year. And this is a pretty aggressive trend that really hasn't quite rolled over yet outside of that first, the October kind of crappy, that was the US-China trade drama. And then we had one of the worst, like no market breadth rallies of the year. And then we had like more deleveraging in the VIX and stuff. Anyway, short term, if we poke all-time highs, but we pull right back to the 50-day, just be prepared for some of that like lovely chop where we just go a little bit higher, a little bit lower, a little bit higher, a little bit lower. But if we're continuing to trend higher, that's fine. If we really break strongly through 7,000, I think this is that upside risk that you and I have continued to talk about. I don't love that trade for 2026 because I feel like that gives the market such a front-loaded head start, which is fine. My concern is that we just don't hold it and sustain it through the year. I think it's going to, give something back if we have like this big blast off top. So I don't know. I'm like, as we talk about, man, I'm picking my battles pretty lightly. I'm definitely using like trade size and contract sizes. I don't know. I'm pretty conservative right now, just to see if I can let the market kind of show us what it's capable of doing. And a lot of my trades, I'm for the most part pretty confident with quality companies going out, 6 to 12 months. A lot of my expirations I'm choosing for the trades I'll post and pulver alerts are going to be out to January 2027. I know we have midterm risk later this year, but I don't think that's going to necessarily just crush strong companies, within like a 30 to 60 day window. I'd be cautious, but still, yeah. I think we've got some good runway here. If the market is blowing off tops, enjoy the melt up. Gold and silver, we got new highs in silver today. Probably not. Nope. We
didn't actually down.
My measured move
today.
Yeah, there's my measured move. That blue line is what I measured from the previous all-time highs. So I don't know, man. Hopefully we just get a pullback coming. I'd love to see this gold trade as well. Oops, gold start to pull back towards that 200-day. We'll see. We got overbought. You love that indicator just like I do. Little overbought conditions with some divergence. So if this lines up on the daily and gold can pull back, any of these moving averages could get hit. The 200-day is what I'm targeting to kind of buy low. So we'll see if this gives us a topping pattern.
Sure. Yeah. And on my side, Chris, just a couple things that I'm watching. I've been mentioning this to you in a couple of our sessions together. I'm looking at international indices. I like the Nikkei. I like the Chinese stock market if we were to get some dips over there. I am still long the Russell, just trailing stops on it. That one's been, a leader this year so far, and I've loved to see that. We had a little nice breakout to start the year in small caps. So that's kind of in terms of conviction, I would say I'm most interested in potentially getting long the Nikkei on a pullback. The chart looks beautiful, but again, a little overextended here. So I would love to see a pullback in the Nikkei. If we could get some of that action, that would be great. I'm looking at this prior all-time high here, which, held as resistance briefly. And then we had this huge, bullish breakout here. So I'm looking for a pullback if we can get that on that side of things. On the Chinese stock market side, we talked about this chart yesterday, kind of made it my chart of the day, just looking at this kind of consolidation. We are at the top end of this. Part of me wonders if there's a bigger theme here where if there's some pushback on the tariffs, and that is kind of a theme for 2026, we're debating where we're at with tariffs. Maybe there's a little bit of reprieve for Chinese equities. Maybe we kind of reset a little bit of the trade war dynamic stuff in a positive way. Could be a tailwind for international stocks, including, the Hang Seng. So we'll keep an eye on it. Again, the other thing is keeping an eye on the dollar index pushing higher here this morning. You're testing the 618% retracement from this prior double top, big push lower. We are retesting that 618% retracement. You've got some resistance here. We'll see what happens with the dollar index. If it does get head and shoulders above this, if we can break through there, perhaps dollar index is headed back towards the top end of this range. Dollar index has been very, very choppy over the last several months. We'll see if we can get some more decisive direction here in 26, but really just been a range bound currency for some time here. And, Chris, currencies have been both very interesting and very boring in the last, few months. I mean, one of the big themes of 2022, 2023, when currencies, especially the dollar, were moving a lot, is you had central banks making big moves, right? Fed was hiking interest rates aggressively. Now we're in this kind of limbo period where a lot of central banks are either cutting very slowly or on pause, or the Bank of Japan is kind of like, they're going to hike rates, but they're going to do it really slowly. So if you're a currency trader, or if you found yourself as a listener right now, if you've moved away from trading currencies as much in recent times, it's kind of natural. Volatility has moved elsewhere, in my view. Currencies are pretty quiet. Doesn't mean there's not opportunities out there, but compare these moves to what we saw obviously in the beginning of 2025. The dollar was moving and grooving. Take a look back in 2022 and 2023. You just had very sustained and strong trends. What do you think, Chris? Is there anything in the currency world that really interests you right now?
Well, I love a weaker Swiss.
Sure.
I've been on a record for going on 3 years now. We'll see, man. If that trade ever materializes, then I'll pretty much double my account. But it's been a long time coming. So dollar, I mean, I think that the tradable thing would be it just stays range bound. I think if the dollar, gets a hard break above 102 or a firm break below 96.50, then yeah, I mean, there's probably some big consequences out there in the currency world for that type of volatility. I think, look, if the dollar basket or the yen basket have like a wild type of year, wild volatility type year, yeah, sure, good for currency traders if you find yourself on the right side of things. But if you don't, I think I never like to see the currency world like have crazy one-sided moves because it's such a efficient market. It does make it more challenging where traders tend to get on the wrong side of those like big, like, oh my gosh, why isn't it pulled back? Why hasn't it had a top or bottom? I mean, so I think right now dollar staying below like 101 and staying above 97 is a very tradable range. If you're going to short-term stuff, I think that's good. It's not super disruptive. Same thing with the yen. I don't want to see the yen go to $120 yen I'm talking about, or go to 200. It's like, just be in the chop fest that it is, pick your battles, pick your short-term trades. I think that this is a good year for Forex traders to focus on, I don't know, maybe some like 15-minute to 4-hour swing trades and try to go after some, 1.5 to 1s, 2 to 1s, and just trade by numbers. It's like, I don't know if we're going to have any big moves because those baskets I just mentioned are, not really making any wide open space moves. So I think you have to kind of pick your swings and pick your levels and trade support resistance, sell high, buy low type stuff, and do it with good equity management. And we'll see what pokes up. But there's plenty of potential for currency risk and volatility this year, especially we talked about yesterday with the Japanese yen. That's probably my biggest potential black swan type event, where I said a black swan if you're talking about it, but at least one of those like outlier risks where, man, the Japanese yen could really wreak havoc on the market with currencies as well as equities.
Yeah, I mean, I agree. I think if you were to get a surprise from Bank of Japan, if they do, decide to get a more aggressive stance on hiking interest rates. It definitely is going against the theme of the rest of the world. If we were to, take a look at, let's look at our interest rates data, interest rate projections. Here's something to think about, right? So if we just take a look at, in blue, you have the U.S. In yellow, you have Europe. In red, you have UK, and in green, you have the Bank of Japan. I know it's kind of hard to see here, but the Bank of Japan is expected to actually hike interest rates in coming quarters. Meanwhile, the other central banks, all three of the other majors, right? Bank of England, British pound, and you could throw in Bank of Canada, RBA. I mean, they all want to cut interest rates. And so you have this scenario in which most of the world is cutting interest rates, and Japan is hiking interest rates, or at least expected to. And so that can cause a pinch. That can cause a little bit of a disturbance in terms of, cash flow globally. A lot of people in the last 10, 15 years, a trade that has been predominant is to borrow from the Bank of Japan at low interest rates and lend it out to other central banks paying more, or to buy stocks, real estate, bonds, etc. And so this is a trade that we will keep bringing up on the stream because it is so critical. You could have some serious market moves when and if that happens. Now, the tricky thing, as always in markets, is timing. I mean, because this has been a story for the last few years that we've been keeping an eye on. But it really, I think, starts to become a little bit more pressing if you were to continue to see the U.S. labor market really weaken and the Fed to cut interest rates more aggressively. That dynamic could squeeze that quicker, right? So if this were to actually start happening quicker, where the U.S. and other central banks cut interest rates quicker, and Bank of Japan still is doing the hiking process, the spread between interest rates starts to narrow pretty quick. Is that a fair way of looking at it, Chris?
Yeah, very fair. And we'll see what the differences are as far as, yields from the Japanese yen, yields from the dollar. Right now, the Fed is only slotted for 2 cuts this year. I guess you could argue there's 3 potentially on the Fed Watch Tool probabilities table. I don't know. I guess if we're lucky and forecast from what we saw with Powell last year going into, we cut rates 3 times last year, right? We cut 75 basis points to go with 2024's 1%. So right now it looks like June is slotted to be our first cut. I mean, I know there's arguments that we might be cutting earlier. Powell is essentially stepping down in May, right after he is. June rate decision is right now highest for a 25 basis points cut, and then at the end of the year, November, October, or I'm sorry, I guess the September, October area for another one. So 2 on the calendar for the year. Maybe that changes. I almost think the market right now is less interested in the Fed and probably more interested in front and center with, what are we doing with Venezuela? What are we doing with Greenland? What are we doing with Iran? There's some geopolitical stuff that's been kicking around like right now in the short term. But a little day like today, it's like the flows are still positive. The flows are still decent. And, fiscal policy wise, I know this is probably the most I've heard you talk about international stocks in the last couple of days, and I have you for months. I do think international stocks will be a pretty strong play for 2026. And, honestly, I just looked at my SCHY positions. We're up. It's not a big deal. It's like Russell's up, 6+%. This is up 1.17. But this is also something that I wouldn't mind just averaging more into. So having a bit of a position that I've carried in from Liberation Day lows last year, in addition to my core position, which was established early on. So, I basically own this around 25. I'm still running with these stocks. Now, any dips, this is one instrument that I want to add to. I think we can go higher. Nikkei, I've traded it's a EWJ. Since you can see my levels down here, my break even is 66 and we're trading up towards 86, which is pretty decent. Nice. China, I don't really know what I want to do on China right now. We have some chop up here to the upside. I did take a really nice profit. So Alibaba last year for me, Alibaba was quite lucrative. You have to remember, I got into Alibaba probably earlier than most. Once we started to, I got a little bit of chop in here, but I was in the low 70s and taking profits once we broke. You can see here some of my like black lines here, swing symmetry and 618 extension. So once we hit like 160 plus, I was trailing. I got trailed out of Alibaba last year. And then Baidu was one of my favorite ones. It just took longer and it drove me crazy. Same type of thing. You can see like this kind of coil position, falling wedge, and the same thing, like own this in the low 80s, just took profit at 150 this week. I didn't take profit on this first run up. I actually added more on a pullback. I was looking for symmetry. This stock, so one of my favorite China picks would be if we see HSI making fresh highs. I think Baidu could break 155 and actually double from there. This is a double bottom pattern. If we get that move, I've got it measured to 240. Not a lot of stocks I look at with a ton of optimism, but that's a 60% move. I don't know. I could get my hands back around that. But what I'm doing on Baidu is selling more puts since I'm out of my stock position. I'm looking to either get long in here again, or just sell some really nice puts back into the 80s and see if they will line up. So are there any individual stocks that you're liking for these international plays? You go in the basket style.
I'm mostly going basket. I do like the one that you mentioned to me, the ILF, the Latin America.
Yeah.
I do like
that's doing better than Brazil right now. That's why I like it. I mean, it's slightly better than Brazil, a little bit more diversified than Brazil, but Brazil needs to just get its political stuff together. I think it'll be better, but they're both really strong to me.
Yeah, it's up a lot today. So I have these on my watch list, and I'm playing the stuff patient. Like I would personally prefer to wait for some dips. I think that you could get them in 2026. Again, I think volatility, kind of coming back down here today after yesterday's little bit of a spike. It's the markets are moving so quick right now. There's headline after headline. Who knows where things are going to be in the next few days? You could get geopolitical tensions come right back in where, gold, silver keep doing their thing. VIX could jump back up. And so, I got to say the market has been very impressively resilient given all the stuff that has been thrown at it recently. Mm-hmm. Here it is, S&P 500, NASDAQ, stone's throw away from all-time highs for S&P, NASDAQ, not as close, but still, 2% away from all-time highs. It could get there in, 2 or 3 good trading days. So really tough for me to be aggressively long indices or chasing into this. But there are some areas that I like better than others. I'm not, if we go back to my top setups here for just a second, I do like on the US side of things, I kind of like the Russell, and I do also sort of like the Dow Jones. So I'm a little bit more on the, dividend paying, value type. I'm just a little bit cautious on tech stocks at this time. I do own some of the Mag 7 for the long term. That just kind of sits in my portfolio. But I do like, I'm still long the Russell, trailing stops on this one, and would love to see a little bit further of a rotation into other areas this year. And that doesn't necessarily mean I think, Mag 7 and the NASDAQ has to not do well. In fact, I think that would actually probably mean all stocks do bad if the NASDAQ's not doing well. Or just broadly speaking, most stocks would not do so well in an environment where the NASDAQ is down. So would love to see, broad participation is what I'm kind of betting on here. And so that's kind of indicative of the same theme of internationals, Chris. It's like, okay, if I'm thinking you could have, other parts of the world potentially outperform the US, tech stocks kind of being a little lackluster. We know a lot of other places are not so tech heavy, like Europe is very value centric and dividend paying and banks and all that stuff. So, what do you think about, this is just a kind of off the cuff question, Chris, but everyone seems to love financials. When I listen to people talk about, financials, XLF, this is the ETF that tracks, a big collection of financial stocks, things like banks and credit services and all sorts of different stuff like that. Everybody seems to love this area of the market. Do you like financials?
I do, but not as much as I like industrials and materials. I think the financials are great, but I think they're getting a bid this year because of the deregulation, and they're taking away some of the duration risk that typically banks have had for the bond market, the treasury market, and they're mixing up the 60-40 portfolio. They're doing more of like gold, silver, like physical allocation. This is an all. We talk about rotation from like tech to other stuff. There's a rotation like out of treasuries, out of bonds, a little bit into gold and silver exposure as well from banks. But when we don't have the duration risk like you saw back with those regional bank crises in 2023, I think that's why people are liking the kind of the pathways being cleared for financials to do better. And certainly, I don't love it if it's going to have more leverage, because that's kind of what got us into trouble in 2008. But I mean, when you look at Goldman Sachs near $1,000 and JP Morgan in the 600s and sitting at all-time highs, They, the whole talk of like bear market recession, I think when you've got two of the biggest banks in the world, like at all-time highs, it's going to be hard to see that. Credit spreads aren't widening, like things are relatively calm. There's plenty of liquidity. So yeah, I think that's good. But as far as, looking for some direction, looking for some alpha and beta, I think you've got to check your like materials, commodity space. I mean, that seems to be what is running in like a stupid way, just because we have like insatiable demand for everything that's AI. That narrative still remains optimistic. And I mean, case in point, look at silver. Case in point, look at copper. Commodities across the board are starting to look pretty solid. Oil's had some early volatility. Natural gas hasn't turned into much, but I know I'm missing stuff. It's like platinum, palladium. Those have popped up a lot last year. So yeah, I mean, the commodity space is going to be pretty decent. This is like a physical build out race. Like this is rare earth minerals type stuff. And China has a big claim to it, but the US is aggressively like kitchen sinking the whole play to like try to win the race. And I mean, this whole AI thing also, it's like, you don't have a monetary limit, Nick. Like, we're talking about, is CapEx spending going to be a problem? Well, if it's backed by the government, do you think CapEx spending is a problem?
Yeah.
I mean, we're talking like we can print trillions of dollars and add liquidity to the tune of trillions of dollars. Do you think there is a limit? I mean, we're talking like the debt bubble has to burst for there to be a limit, and we're at what, $400 trillion? Is that ever going to be repaid? No, it never will be repaid. It'll be just refinanced somehow or creatively written off. So anyway, base materials, industrials, I think will be pretty promising this year. Financials, I think because they're getting the deregulatory benefits that the government's kind of pulling away some of the red tape. So it looks good. I wouldn't be aggressive on them. I think that the broader market. I mean, look at the structure on XLF. If we pull back to some of these moving average and we start to bottom out, what a good place to buy it, right? Pull back into this support, start to take some bites here, like 54 down to $52. If we hold that support, we go back to highs again. It's not a big percentage, but if we go from 52 back to highs, you're getting an 8% move. I mean, that's not nothing on financials. I mean, we could have a lot of sectors like in the maybe 5 to 15% range. Maybe that kind of reflects what we get in the S&P this year. I mean, not that we're making forecasts here, but what do you think for like? Do you think we're gonna have double digits again? Do you think we can go double digits again for S&P and NASDAQ this year?
So it's tricky. I think that if I was to make my educated guess on what I think the stock market's going to do, and Chris, I looked not too long ago at some of our forecast sheet from a year ago and or a year and a half ago, and it's just goes to show how hard it is to predict stuff. Because I mean, we all had precious metals moving up, but none of us had silver and gold.
Not to that degree.
No, nobody had silver on their bingo card at going up 150%. And what I'm referring to, for listeners who don't know what I'm talking about, Chris and I, like a year and a half ago, we put together for one of our webinars, we put together like our predictions list for the year ahead. And if you know my content, well, if you know Chris's, we're not big like prediction people. I'm very reactive to what charts are doing. I'm a trend follower. I'm a macro trend follower. I could make a prediction as to where I think markets are going to go, and with humility, if it goes the other way, say I'm wrong and I'm updating my view on this. It's kind of like the scientific method. Scientists, stuff based in science constantly updates for new information and has no ego attached to it. And I think you have to trade like that. So anyways, when it comes to my current outlook for the stock market for the year ahead, I think you get kind of like a very mixed response. I think you could still have a 10% up year, but I think within that you probably get some dips. And so I know that's kind of the safe answer to give. 10% is the long-term average. But I wouldn't actually be surprised if we actually did see around a 10% return, which you rarely get. You usually get like up 25 or down 15. You usually get one swing or the other. I wouldn't be surprised if we're somewhere in the single digits or very low teens, because I do think you could probably get some volatility this year. We've had a really good stretch. You could call it even a little bit of a lucky streak here in terms of how well things have gone, in terms of how they could have gone. I think that if I'm not going to make a prediction as to what I think the thing is going to be that's going to drag the market down, but I think you could get some volatility. I think it's unlikely that you're just going to have a perfect grind up like this all throughout the year, which is kind of what you need in terms of a 25-30% return. So yeah, I mean, I think 10-15%, that range is a fair outlook for markets for now. But where I kind of think is a stronger call on my side is I think the rest of the market could actually outperform tech, which is I think a little bit more of an aggressive call, but that's my thought.
And I think that also would probably limit the upside. If we don't have a strong tech rally, I think that getting to 15-20% is going to be very difficult, where maybe getting to 8 to 12% could be doable if it's led by other things. As you were talking, I was just going through some of these sectors. Utilities, probably a good one as well, but more like by necessity. I mean, if we start putting a lot of strain on the energy grid, I think XLU could benefit from that. I don't really like the physical play, just because this is we have blackouts. That means high demand. Utilities could go up because of that, but that's almost problematic. That is giving utilities a bid. Tech, nice little run, obviously, since Liberation Day, but maybe some pullbacks in here. Honestly, a lot of my tech exposure is reduced. This is what I talked about earlier. Basic material already starting off to a pretty good bang. It's up 7% for the year. Industrials, it's already up 5.5% for the year. It's these are keeping pace with small caps, and that's pretty impressive for a sector to be off and running so aggressively. So that's why I said XLI, XLB, probably two of my favorites. Not that I want to buy the highs, but I'm looking for any type of dip, pullback, pause. I think those are good ways to stay long. XLI, XLB, that could be also a pretty healthy rotation in the market.
Yep.
So we'll just keep eyeing this stuff, but those are kind of the sector plays that I'm looking at this year.
I like it. Well, guys, we're out of time on this segment, but don't go anywhere. The show is continuing. We've got up next, Miko is coming on just after this quick break. But before we go, let me just thank Chris. Of course, thank you for coming on, man. As always, if you guys want to check out Chris Pulver, look him up on YouTube, on socials. Just search up his name, Chris Pulver. Should find him there. We'll also drop the link to his YouTube channel if you want to click it direct here in the live stream chat. Chris, thanks very much, man, for coming on, and we'll see you on the next one.
Sounds good. Thanks, Dick. See you, everybody.
See you guys.
Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about, thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Okay, what's up, people? Hope everyone is doing well. Good to be back. As always, I'll go through some markets which I'm interested in this week and some markets which I'm trading as well. I do have a position on this week, so we can go through that. Actually re-enter the same position, we can go through that. I will mainly focus on USD and the yen. That's really where my interest is, but of course, if you do have any other recommendations, any markets you're looking at, let me know. Crypto indices, we can take a look as well, of course, other markets as well. But I do have a position on the NAS which I re-entered today. I did actually get stopped out yesterday. I originally entered the position on Monday, so the initial trade I had was here. Very, very bullish coming into the week. It was one of the markets I was focusing on. I was looking at NAS, gold, and New Zealand dollar, which we can take a look at shortly. But yeah, it was very, very bullish coming into the week. Still do have that bullish bias, which is of course why I re-entered the position. But the NAS has been so consistent with these higher lows. And of course, we had that natural incentive to keep this uptrend going. And as we've been consistent with these higher lows, we have started to take out some highs. So that for me was a bit of a sign to say, okay, maybe NAS is now creeping up higher. Sellers are failing to hold resistance. Potentially you could look to go and catch up with the S&P, with the Dow Jones, other major US indices, because NAS 100 hasn't made a high in a while. Our prior high was back in October, whereas if you look at the S&P and you look at the Dow Jones, they've made some new highs recently. If you look at the corresponding high in October, we've taken that high out a while ago for the S&P, and even before that for the Dow Jones. So these indices have been a bit more bullish than the NAS 100. So I'm basically trying to play the catch-up trade. Can NAS catch up with the S&P? Can it catch up with the Dow Jones and potentially go and see some new highs? And as long as we maintain these higher lows, I do think that's the more likely outcome. So I did enter a long position on Monday. I was in a bit of profit. However, we failed to break the highs there essentially. Came back down, really nasty bearish move, but the key component was the market didn't break structure. So if the market did start to take out some of these lows, that's where I would take a back seat and maybe be a bit more just kind of watching the market, a bit more conservative, not necessarily so aggressively bullish. But because we just took out some minor lows, of course my stop loss as well, but then we've had this kind of resurgence of momentum, bullish momentum coming back in, closing back above support. That for me was a sign to get back into the position with the same idea. Not as best risk reward. It would be slightly more beneficial if I got a slightly tighter entry, but yeah, you can't always get the best entry, just reacting to what the market's providing. So yeah, currently in NAS, still looking for a push to the high, nothing more complex than that. I do have some other markets which I'm keeping a close eye on. Some of these FX markets might produce some opportunities for some follow through lower. I'm looking at Pound Aussie, Euro Aussie, Euro CAD, and Aussie CHF. Very Aussie correlated, so I'm not planning to take them all. In terms of the USD markets, they've been relatively interesting. I like one of them, New Zealand dollar. I'm keeping a close eye for shorts on New Zealand dollar, but the main takeaway this week and coming off last week as well is that USD is looking quite bullish. Now, I'm not so hugely bullish because I can be bullish or bearish, but just because I'm bullish or bearish doesn't necessarily mean I have to take any opportunities or find trades. Only when I'm confidently bullish in terms of the confluences line up and conditions are prime, then that's the time to start to act and make decisions if necessary. We're potentially getting to that stage, but I would say, okay, in the bigger picture, USD is quite flat. We've got equal highs up here, equal lows here, and more or less anything in here is kind of just price fluctuating, reacting to different headlines, you know, buying and sellers, all kind of just battling out with each other. Nothing really concrete until price potentially breaks out of the high, breaks out of the low, or maybe comes back and respects it. Those are the key areas which I'm really watching for the dollar, because if dollar was to go and break through this, now that's pretty significant. We could probably expect some really big bearish moves for pound, euro, and maybe some trends forming, and that's kind of really where I'm interested. So if I'm looking to do anything with the dollar at the moment, I am hinting at that bullish bias because we have just gone and shifted in market structure recently on the daily chart. You can see we've just gone and taken out this high recently. Momentum's picked up. Looks like we're taking out this high as well. Perhaps we're getting ready for a push back towards resistance. That could be the play. And if USD is going to make that move, then of course pound USD, euro, etc. could be looking at some follow through lower, and they are hinting at that. But the one USD pair which I do like because of the current structure and how everything is shaped up is New Zealand dollar, because we've got this pretty persistent bearish trend. It's not the cleanest trend you'll ever see, but consistent low lows and low highs. Momentum is relatively strong, and it looks like price is failing at this breakout. So if that's the case, if we try to continue but price is failing to break out, then the other option is trend continuation. If we've got a trend and price tries to invalidate the trend but it fails, well then the only other option is continuation of the trend, or arguably maybe a consolidation. So as long as we don't consolidate, there's a good chance we see some follow through back to the lows. And of course, if we do have the DXY making that up move, well, that should help things out. And of course, we'll see what happens with NZD, strength and weakness in the currency itself. But everything is pointing down. The only reason why I'm not in a trade yet is because we are still quite corrective. So I need to see a bit more follow through, a bit more momentum to really say, okay, the bears have really stepped in, because I don't need to find the best entry. If the trend is going to continue, we've got a lot of room to target, to potentially target back to the lows here, around 0.558. There's no need for me to get the best entry and really maximize the opportunity. I'm just trying to find a good opportunity to trade, based on the risk reward, as long as it makes sense, I'm happy at the end of the day. So don't want to jump the gun and get in too early. I want to see a bit more conviction to the downside, a bit more momentum, follow through. Then I'm happy to find a pullback somewhere to take it into the lows, provided everything still looks clean. If we do see price break structure, but then it looks very fatigued or very corrective shortly afterwards, again, I'll still be quite hesitant. We need to see consistency for me to jump into a position. So yeah, New Zealand dollar I like. Like I said, in terms of other USD markets, I'm kind of just waiting for the DXY to approach a more significant area before I make a decision. I'm always looking for trades which I can swing. Therefore, I need to be patient. Therefore, I need to make sure price is in important areas. There's no point taking swing trades just because the market is moving. There needs to be some importance with where we're moving from or where potentially we could move to. So the key areas I'm focused on is 196.5 regarding the dollar. In terms of like gold and silver, these guys have just been so bullish, of course. Again, the thing with gold and silver, they just haven't had some of the pullbacks which I like trading, which are more kind of custom to FX, because FX don't normally explode like this, and they do normally have pretty big pullbacks. So that's kind of my style. But gold and silver have been relentless, very, very bullish. We've had kind of one decent sized pullback for both gold and silver back over here. Maybe you could argue that, but it's still quite volatile. And same there with gold as well. I did like this pullback. It's just, it didn't provide an entry for me for gold. It kind of broke back underneath this zone the way I drew the level. I'm looking at the high. We did categorically, in my opinion, break underneath the level. I wanted price to sit on the level and then I'll find some entries. And then eventually we did close back above, but no, of course, retest, unfortunately. And since then, gold has been looking pretty bullish. And yeah, I just haven't found an entry to participate. But gold at the moment is still very bullish. I would be looking at some type of pullback. I do like this area here in the 4 hour, a nice brief kind of consolidation before we spat out that momentum. I would like to see a retest of that zone. Of course, we'll have to see if it does come into play. At the moment, gold is just kind of consolidating, and I don't really see much opportunity unless maybe you're scaling right down to the low time frames, and silver is just absolutely loving life as well. I do like this for silver, though. We create a bit of a double top here over the past few weeks. Test that area once, test that area twice, and now we've seen a significant break. So around this 82.5 area, that's a pretty significant area to me now. So if price comes back here, I will investigate to see how we react. That could be a possible area for additions to this long, to this bullish trend. So metals, opportunity is still there. As long as the trend persists, momentum looks good, structure looks good, still really just trying to take advantage of that trend. The moment things do get sketchy, structure breaks or consecutive failing at highs, doesn't necessarily mean it's bearish, just means, okay, maybe we should be a bit more patient or not as bullish as we've been previously. Let me see if there's any particular markets you guys have requested. Okay, I'm seeing Kylian Mbappe. I'm seeing some indices requested. What's up, Yoshi? Hope you're doing good. What's up, Cedric? Welcome to the stream. Hope you're good. We can take a look at Euro USD. I can go through some indices as well. We can take a look at some. Oh, okay. Yeah, we'll go through. Actually, yeah, we'll go through cryptocurrencies actually, because they're actually looking very interesting. There could be a bit of a swing trade actually opening up for BTC, Ethereum, etc. So we'll go for Euro first, and then I will take a look at where's Euro there. We'll take a look at Euro USD first, and then we'll go through. I'll do S&P quickly, then we'll go through some cryptocurrencies. So they look very interesting. Of course, any other requests, drop it in the chat, and I will take a look. But yeah, you're looking pretty bearish now. I don't see much opportunity here for euro. Same situation as the DXY, which is the market is just really, really ugly, to be honest. And if I'm going to find any opportunities on euro, I'm kind of forcing an opportunity rather than waiting for an opportunity to come to myself here, because the way I see it, it's kind of like a weird unorthodox range in terms of, okay, we got more or less equal highs here. There's your first test. That's kind of your fake out. Now you've got a third test, if you will, of that area. And then you've got the low here, which hasn't had a retest. It's actually had a higher low. So it's not your textbook range. I mean, you can potentially call this more of an upwards channel, and I wouldn't argue, to be honest. Essentially, the market is quite flat. That's the main takeaway. So you got your consecutive higher highs, consecutive higher lows. So in terms of opportunities, what would I be looking to do here with euro? Nothing. And same because I'm looking at the DXY analysis as well. We're in a similar range to, again, very correlated markets. If there's nothing on the DXY, there's probably nothing on euro and vice versa. So in terms of euro USD, what I would be waiting for is to see what price does with this higher low. Does another higher low form, or do we break through and persist and maybe push to the low of the range down here around 1.14? So I'm basically asking questions with euro USD rather than trying to find a trade, because normally if I'm taking a trade, normally it's quite clear. Normally it's not necessarily obvious. I mean, obvious could be a word to describe it, but it's quite clear. You don't really have to argue or spend too much time. Trades should be pretty clear. Good trades should be pretty clear. If the market isn't pretty clear, you should just be asking questions, noting down what the market is doing, and then eventually a trade opportunity should present. Of course, it depends on the time frames you're trading on, but from a swing bias, I'm kind of just observing, asking questions. Do we form a higher low here? Okay, if we do, that's important because that means this channel is still persisting. Perhaps this very slow uptrend is still at play. Perhaps we could still see a run back to highs. That's something useful. If price comes back to the low of the channel and breaks through, okay, that means the bullish narrative is collapsing further. This is more into a horizontal range, more into a normal orthodox range, and then potentially I'm looking to see what do we do here. Do we bounce here? Okay, that's something useful as well. Or do we even break through that low? That's very useful in terms of, okay, maybe this up phase is over, this consolidation is over as well, and perhaps that's going to start potentially a bit of a bearish trend. That could be a situation too. So when things are not clear and opportunities not obvious, it's just asking questions. What should I take into account over the next few days, over the next week, for potentially a trade set up to form? Those are the questions I'll ask with euro USD. In terms of the S&P 500, this is just very, very bullish, to be honest. I'm not so interested with the S&P because S&P is doing its job. It's making new highs. I'm not the biggest fan of getting involved when the indices are doing their job very well. I like it when they're not quite doing their job and then they've got the potential to go and do their job, if you will. What I mean by that is because, of course, the inherent nature of the indices is to trend higher. So if the market is not currently, well, it's still in the trend, but not currently at the highs, then I see opportunity because I can trade it back towards the high. If the market is at the high, then the job is done. Of course, price can still go higher, but it's like we've done our job. The opportunity's kind of diminished. Now it's more kind of smaller intraday dips that you kind of looking to buy. Any kind of meaningful swing trade, you typically want to catch it on a pullback. So that's why I'm inherently quite focused on the NAS right now, is because the indice hasn't really done its job over the past few months. We create the high in October. We're in Jan now, still no new high created, but we're still persisting with the higher lows. It's not like the market is collapsing. We are having that natural kind of uplift with these higher lows. So everything looks to be functioning healthy. It's just we're not at the highs yet. That's why I see NAS as a really good opportunity. With the S&P, everything looks pretty clean here. Uptrend looks pretty intact. In terms of any meaningful swing trade, I don't really see one unless we have another pullback. But of course, if you scale to lower time frames, we do have pullbacks here, and these do provide some nice intraday, maybe even intra-week opportunities. So if that's more your thing, I think there is still opportunity for the S&P to get back to highs here. Not quite there yet. There might be some intraday corrections that do set up, and that could be a nice opportunity to trade it back to highs. Job's done. Maybe trail a stop loss if you want to see if you can squeeze a bit more out of the trade. That makes a lot of sense to me there as well. So that's kind of my take on the S&P. And in terms of BTC, which I think is really interesting, momentum's just picked up recently. We're seeing that across the board for a few cryptocurrencies, but of course BTC is the big one. And yeah, is this the real deal? Is BTC actually forming another higher low, or is this kind of just noise that looks promising? Again, the answer to that question you won't know until hindsight. But what I will say is, it looks pretty promising, and if something's promising, probability is good, it gives you a good opportunity to enter, risk to reward makes sense, then really that's a trade that makes sense. Probability's on your side, risk to rewards on your side. You let the edge play out over the long run. So with BTC, you've come into a very interesting area, big demand zone, gave us our last swing to the upside, which of course created the new highs there. We come back to retest the same zone, multiple wicks into that area, momentum starting to pick back up. I would say we've got a pretty good chance for BTC to come back and retest this consolidation, which of course is the high that gave us that bearish move. I'm not necessarily so convinced with BTC back to all-time highs. Of course, naturally that would be the move, but I can see that the market structure is very tired. Each pullback is steeper, so you can see the trajectory of each pullback is getting steeper, which means we're more tired, we're seeing more bearish pressure, and the pullbacks are a bit more frequent. And we're not seeing price break highs as far as we did previously. We're seeing really huge breakouts here, clearing the previous high by a lot of distance. We saw it again here. Now that's kind of diminished. So on numerous fronts, it looks like BTC is tiring. Doesn't mean the trend is over, the bull cycle's over. We could still see another high created, and maybe even another one after that. So I'm not trying to call the top, but it's just to say that I'm not expecting anything, truly exponential. Of course, anything can happen. But if I'm looking to trade this, I would say, okay, this is the zone which I think there's a good chance we get to. Anything beyond that is I'm trading a stop loss, just trying to see if I can really maximize the trade. If it doesn't play out, it doesn't play out. The main idea was a push back to here, which I know has a pretty good probability. In terms of looking at the market structure here for the daily chart, what I like about the price action is that we're very consistent with the higher lows. So you can see we have this bearish dive here. Then the market keeps maintaining these support zones, and we keep respecting each one, forming higher lows as a symptom of respecting the previous higher lows. So you can see how consistent we've been, even coming back into structure here. We came back, retested, and the market shot to the upside. So there is that kind of natural kind of uptrend that is slowly taking shape, and now we're seeing momentum come into play, and we're also seeing price break resistance. So we're ticking a lot of boxes here to say that, okay, BTC buyers are really stepping in. As long as I don't see something like this happen, we break through a low, as long as I don't see anything like that happen, I would say buys make sense. And I would say there's two areas where buys make sense. The first one is the slightly more aggressive trade, but you never know with BTC, it could just fly at any point. So taking the aggressive trade does make sense, especially when the risk reward matches up. So I would say if we can get a retest of the high here, I say that's a smart trade. And if we have a deeper pullback into this zone here, I would say that's a smart trade as well. We're still respecting the higher lows, coming back into another support demand zone. If we can see a healthy reaction there, I would say that's a smart place for a long, and you've got a pretty decent target in terms of the distance. So yeah, I do think there's opportunity on the cryptocurrencies. I am skeptical with how exponential we're going to be, but pushing back to that area, if you can find a good trade there, especially for intraday entry, you're looking at some really healthy returns. Price doesn't have to hit all-time highs for you to walk away with a good trade. Same situation with Ethereum. You can see Ethereum is coming back into a nice demand zone as well, reacting to. We're seeing consecutive higher lows being respected. So we've got the first low here. Let me move that zone out of the way. So we've got the first zone there, respected. Next zone, respected. You can even say we came back to respect some intraday demand zones there. That was respected. Then came back to this zone. That was respected too. So we're seeing that consecutive high lows hold. I would say the only thing for Ethereum, which is a slight con that BTC doesn't have, is that Ethereum is still struggling at resistance, whereas BTC, we've cleared it. So I would say this is the more promising trade because we've got less resistance overhead. So we're not directly buying into something that could send price back against us. Whereas Ethereum, you're in a little bit of trouble here. Of course, price could smash through that zone, but equally we could reject it and have another pullback. So if I was looking to buy Ethereum and I'm willing to be slightly more aggressive, I would say, okay, if Ethereum does reject this high and we do dip back, I would like this zone here for a buy. Same situation as BTC, kind of continuing the higher lows there. The reason why it's a promising trade, you're continuing with what the market is doing, so it's natural, you're not forcing anything. And again, if the trade does play out, you're looking at a very healthy return. I would be looking at price coming back to that consolidation there, which again gave us that bearish move. So risk reward looking pretty favorable in my opinion. And then of course, if Ethereum does go and break highs here, so let's say we do get a breakout through resistance, then of course, then you've got the other trade idea there forming there too. So yeah, I quite like what I'm seeing with the cryptocurrencies. I think there's a lot of opportunity to the upside. BTC looks like it's more or less ready to start looking for entries. It's just, can we get a decent pullback in? And of course, the thing with BTC as well is that you can actually take some breakout. I'm not really the biggest fan of breakout entries just because my bread and butter is FX markets, and breakouts are always tricky with FX markets because they're very range bound. They mean revert all the time. So if you're going to take breakouts, you have to be very precise with them. With cryptocurrencies, again, they can have the times where they do consolidate, and taking every breakout will actually be not a good idea. But when it's time, when the regime's right, when they're in that kind of bull cycle, of course, I probably would say we probably get breakout opportunities rather than break and retest opportunities. So it's probably actually better off taking the breakout. If that doesn't work, you can always re-enter on a break and retest. So again, not really my textbook, but I would understand taking some breakout buys just because, okay, resistance cleared, I'm going to take the breakout there, stops back underneath the level and see how we go. Risk reward makes sense as well. And again, if it fails, you can always look for re-entries. And if it is a fake out, it's a loss, manage risk, you move on. Same thing with Ethereum as well. Breakouts above the highs, I think there's a real opportunity there as well. So yeah, I would keep a close eye on cryptocurrencies over the next couple of weeks or so. I think there's a real opportunity there as well. It looks like a BTC bottom to you. It does look like a BTC bottom as well. I would agree, man. I would agree. I'm getting similar vibes to what happened. Actually, it's kind of like an invert, but it's a similar situation in terms of a big bearish move. Price consolidates for a while, and eventually momentum comes in through. Kind of the same situation here. Visually, slightly different, but the same concept in terms of a big bearish move. Price is now consolidating. Now expecting momentum to pick up. What you don't want to see is bearish momentum to pick up, because this could just be a bearish move, consolidation slash rest, if you will, and then potentially follow through lower. And if we take out that low, things do get ugly there for BTC. So I would say it looks similar to this, maybe not, candle for candle, but it's the same type of situation in terms of bearish move, pause, bullish momentum picking up. And if it does play out, you got some healthy risk reward. And I think that's the key thing here. We're not calling this move just to catch a very small move here. It's a pretty measurable move, so it's worth the opportunity cost. So keep an eye on cryptocurrencies over the next couple of weeks. If momentum does die out, we kind of just roll back over, and then we kind of consolidate. That's where things get a little bit weird. And then I'll just turn into watch mode, just see how price progresses. But because we've made the breakout now, I want to see follow through in the next few days. I don't want to see price start to consolidate again, because when the cryptocurrencies get moving, they get moving. It start stop is not really their style. But anyway, guys, we have come up to the end of my section here. I do hope all of you have found it useful, enjoyed the section. I've enjoyed it as well. So appreciate A1 for having me on the show. Thank you so much for the opportunity. Guys, hopefully we'll be back again next week. So check out my channel. I'm pretty sure A1 and the team have dropped my channel there, so you can check it out for yourself. But have a great day. Have a great weekend. I'll catch you all next week. Take care.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How is everyone doing? Happy Thursday. Hope everyone's having a strong end to the week, almost. Not Friday yet. So we just had New York open. Alphabet taking a large hit to the downside. Tesla had a really nice spike up. However, not really much development after that as we have wicked to the upside. We're now back at the sort of pre-market pricing. Roughly, we've had the Nasdaq also not do too much, and the S&P is also relatively flat in the open. Gold's not doing that much. We are starting to see a little bit of buying interest here, but yeah, nothing really worth talking about, to be honest. So not really anything has changed. I suppose the only change I've had in my portfolio is liquidating the pound Swiss trade. So yesterday, I told you guys was it yesterday or maybe last week? I can't remember. These streams start to blend together after a while. Anyway, I told you guys I was trading my way out of it, which I did manage to do. So I reached a point here on the daily 200 moving average where I was like, you know what? If we are going to see a turnaround in pound Swiss, it's very likely going to be here. So I was selling this market pretty much from here. Basically selling all of these sort of rallies, if you will. Managed to get out for a just under a 1% loss, which, you know, again, is completely fine. I allocate 5% to trades like this. So getting out under 1% is completely acceptable. So I traded out of it, in my opinion, for my risk tolerance, which is completely acceptable. So the only positions I've got now is one on a stock and another one on a yen pair, but I'm not going to go over them because they're both still at entry. Can't be giving free trade ideas away. Anyway, moving forwards. Sorry, I didn't finish my pound Swiss idea. So I'm still actually very bearish on pound Swiss. I really like the idea of being a seller. So what I'm waiting for to establish a new position here is actually just waiting for this daily candle close. So what I would like to see is price respect this 200 moving average again, or maintain below the 200 moving average is a better way to say it. So you can see we came up on this daily candle, failed to break and close above. The yesterday's daily candle did come above, but again, failed to close. And we've had the same situation today where we came up, failed to close above, and we're now seeing selling pressure step back in. So if I can see a strong rejection off here, I will quite happily go short again, looking for this low to get tapped into. I think the approach would be different this time, though. It wouldn't be a DCA trade. It would just be a sell, stop loss just above structure in the 200, and a take profit down here. Very bread and butter stop loss take profit style trade. Okay, trade like a tiger. Hello, hope you're well. Sluggy, hello. Andrea is saying pound dollar falls. Yes, the dollar has had a good time. I'm a little bit salty that my position size is so small on the dollar because I have been, well, as I have been buying, I've got one very tiny long position. So yeah, it's good to see. Euro dollar is also having a very rough time here. Unfortunately, not in euro dollar either. But yeah, the pound dollar definitely seeing some downside as well, which is good to see. I think the dollar strength is completely valid. I'd be quite happy to continue buying dollars. So Euro Australian, we spoke about this one yesterday on stream, and I actually really like this idea. One of the viewers mentioned it, which it wasn't even on my radar, but after it was brought up, I do think there's a lot of potential here. So I would like to see some sort of pullback. Unfortunately, I missed this. I didn't really feel comfortable entering on this level, mainly just because of this sideways price action. It just seemed like in a gut feeling like we could have come a little bit higher and then decided to come down, which is still possible. So I'm not forcing any entries at the moment. Again, I would like to see a slightly higher price, reversion back to the 200, and then I would look to short. But yeah, I think the Euro Aussie is a great trade idea. We do have a relatively decent central bank divergence. It's nothing too interesting. The ECB seems relatively neutral at the moment, and the the Reserve Bank of Australia is neutral / hawkish, sort of in between the two. So there's not a huge divergence, but it is something we could possibly trade off. Silver, Bruno, I'm short NQ at 25945 entry. You're short. Okay, cool. We'll have a look at that in a second then. Silver had a nice down move actually recently. I saw it on Twitter. People were talking about silver taking like a 9% hit. I assume it was one of these two candles, either one. Actually, it must have been this one. But to be honest, silver still really isn't an opportunity to buy in my view. I think silver is going to 100. I think the market can just continue higher. When I say it's not a good entry, I just mean, or it's not a good trade, whatever I said. I just mean on a price action view, I just cannot seem to find an entry just yet. Ideally, I would like to see some sort of profit taking, a bit more of a large move to the downside, retest. Hold on, let me move this. How do I get this out of the way? There we go. Come down and retest these previous highs. And that would be a phenomenal entry, I think. Obviously can't see the future, but I think that would be a very, very solid point to look to be a buyer. Euro pound and DAX longs look good. Yeah, we'll move on to Euro pound. We could also look at DAX as well. So am I going to give away a funded account? Why would I do that? I think it's Marco that does the funded account giveaways with DNA Funded. I think there's an A1 deal going on with them, but I'm not sure on the details, so I'm not going to speak on it. So Euro Aussie, sorry, not Euro Aussie, Pound Aussie, same thing that we spoke about with the Euro Aussie. It's basically, I just want to see a slightly higher price just for me to have this reversion to the 200, retest this level of structure, and then look for shorts. On the other hand, we could look at a slightly different entry where we're looking for the break below, then the retest and a continuation lower. Either one of these situations will be good. I prefer the first one where we do come higher and then sell. But if I've got no choice and this is what's given to me, obviously I will take it. Speaking of Pound Aussie, we do have it on the EdgeFinder here with a bearish reading of -6, which is a really nice confluence to add into that idea. So yeah, I think Pound Aussie, it should be, and I say should, underline that word, should be quite a good trade as long as we can get some sort of criteria to actually get an entry. He has no session today. It might be Friday. I'm not too sure. But yeah, and I think yesterday I did hear him say he was going to give one away this week, so I would assume it's tomorrow. But again, I'm not fully informed on what's going on there, so I don't want to speak on it. So gold, same thing as what we just discussed with silver. I'd like to see a retest of this previous all-time high. We've already had the break, so yeah, just looking for this retest. And again, this would be the optimal entry point, I think, at the moment. Secondly, I think down here, just towards the previous highs, would be also quite ideal. But I think it might be a little bit optimistic to expect gold to come all the way down here and then start rallying. I think, to be honest, just based on the way that gold has been moving, this is seeming like the most likely option, where we just come down to the 50 moving average and then bounce off that and continue with the aggressive uptrend that we've been seeing over the past couple of years. Aussie New Zealand is also on the list, unfortunately. Still can't get an entry. We were in Aussie New Zealand actually from the end of November to the start of January. So we did get a really nice move on that one. That was a great trade. So I'm looking to get back in, but yeah, just not really seeing any opportunities. I'd like to see basically, again, the same setup we just discussed on gold. Since we've broken above the previous high, I just want to wait and see if we can get that retest and then again, that run higher. Now we might have already had the retest on these wicks, price action, it can be very discretionary, but for me to get in, I would need to see it pull back to the high and then continue higher. So that's pretty much it. EuroCAD's there, but I'm not overly interested in EuroCAD either direction. We were obviously in a very aggressive uptrend. However, it seems to be fizzling out. The fact that we have been sort of consolidating around this level, failing to break higher from the previous high. And again, we are sort of seeing these moving averages start to converge here. It's looking actually like we might see a bit of a correction. Don't quote me on that. I don't know. And I'm not trading the market, so I don't really care too much, but it's just not looking great at the moment for a long position, in my opinion. You heard there's an EdgeFinder giveaway. Again, unfortunately, I've got no idea, my friend. Sorry, I can't really be much more help with you on that one. I'm sure if you talk to the A1 guys or you message their Instagram account or something, they could probably give you more details. So yeah, Euro Pound is looking a lot better, actually. So we were saying yesterday on Euro Pound that I wouldn't really want to buy here, just because if price did come down to this point, it would have invalidated this uptrend, the 200 moving average, in my opinion, because we did already come down. Buyers had a chance to step in and continue higher, which they very clearly didn't do. So if they came down here, it would have signaled to me that the trend is a little bit too weak. Bearing in mind, I like to just follow the moving averages. It's kind of a nice little flow, or whatever you want to call it. It's just my reference for entries and the trend. But yeah, the fact that the current daily candle is actually showing a little bit of buyers stepping in at the moment. I mean, we're still within this sideways range, so it's not a huge deal. I would really need to see a candle close above this little range here, engulf, hold above the 200, and then I would be happy to be a buyer, probably up until this next high. Euro Pound is on the EdgeFinder as far as I'm aware. Let me just double check. Bear with me for a second. Or have I been deceived? Is it no longer on there? It is, but it's neutral. So yeah, maybe actually it's not as solid as I would like. Joshua, I'm doing good, thank you. How are you? Can you mentor me one-on-one? Maybe, probably not, I'll be honest, but depends how much money you've got. My time is quite valuable. But if you've got some disposable money and you're sure you want me to be the one that teaches you, fine, send me a DM. Okay, so let's move forward. Let's just take another quick look at the New York session, what's going on here. So the S&P is continuing lower. Gold seems to be actually pretty indecisive. We're currently we're currently hovering around this cluster of moving averages in the VWAP, so not really anything there. Alphabet's trying to make a bit of a recovery. Tesla's doing nothing. Yeah, the S&P and the NASDAQ are seeming like they're continuing lower. Pound dollar also taking a bit of a rip to the downside as well, which is quite nice to see. Again, because I'm long dollar, I am quite happy to see euro dollar and pound dollar continue to the downside, which is yeah, quite nice. Okay, so let's have a look at some more potential trade ideas. Let me just sort that out. There we go. What have we got here? So let's filter, get rid of neutral. We don't care about the neutral ones. So Euro Swiss and New Zealand dollar Swiss. I'm just not a fan of these ones. And the reason is because I think we do have a bit of risk appetite in the markets. Risk off appetite in the markets. Because if we look at the landscape, although it's not a data point, so like the tariff situation with the Supreme Court and Trump, we've got the Fed independence questions. Obviously, Trump is going after Powell, as it seems. We've also got some concerns around the stock markets as well. Well, not massive concerns. That's actually probably not a valid point. But anyway, I think there is a little bit of a concern. So I'm not really willing to be selling Swiss at the moment. So these two trades, in my opinion, are just not for me right now. However, the Nikkei, so Japan 225, is something I would love to be involved with, actually. So let's pull up that one. Sorry, I'm really picky with the layout here. I've just got to get it right before I can actually look at the chart. So with the Nikkei, I think actually it's quite simple. I think all we'd really need to see is a pullback into this previous high, and then we could run higher. So the technicals actually seem really clean. What we've got is this double top. We've had the break now with this very aggressive impulse candle. Again, doesn't matter what you call it, but whatever. Aggressive candle broken. Just need to wait for that retest, and then I would be quite happy to actually just be a buyer. It's very similar to gold, really, in terms of the way it's moving. It's just excuse me. Excuse me, sorry about that. It's just respecting this 50 moving average very, very nicely. So I don't really see waiting for this 200 moving average reversion being a wise decision, just because you might end up waiting too long, missing the trade idea here or missing the opportunity here, and the trade runs off without you. again, as I've been saying over the past couple of days, that's basically the mistake that I made on gold last year, which is why I missed so much of the move, is because I was really waiting for a larger pullback, which just never happened. We were just respecting that 50 moving average for such a long time. I just couldn't really get a valid entry. You've got cheeseburger for a one-on-one. Send it my way. That's fine. We'll take that. It's good payment. Dollar Swiss. Let's see, what do we have here? Absolutely nothing. So although, yes, I'm bullish on the dollar, technically on dollar Swiss, I don't see any opportunity here. So I think really, if you're going to be a buyer, you would have to be a buyer at the support level, because we are just really trapped inside the sideways range. There's nothing else going on. So if I was to be involved, I would have to, yeah, as I said, be a buyer at the support level, or I would have to see a break above, retest, bullish trend establish, and then a continuation higher. Right now, it's kind of in what's known as no man's land, in terms of it's just in the middle of a range. So yeah, there's no way, for me anyway, to trade this. Every pair is having more volatile movements. Excuse me. Let me restart that. Every pair is having more volatile movements, and the euro is just stagnant, only moving because it's counter pairs such as, oh, such a headache. Yep. I know. I think, I can't remember who it was. Was it Alan or someone yesterday said that there's very little going on in the FX markets right now, which is, in my opinion, also very true. If we look at a lot of the central bank the central banks at the moment, that in terms of their stances, there's just not really anything for us to trade from. So the way I trade, I like to see a hawkish central bank or a dovish central bank. I will trade it against a central bank that's basically got the opposite, and that's sort of the divergence I look for there. I also like to trade the interest rates as well, but there's just not really anything to do. There's very, very little. I think the opportunity might just be buying dollars. And again, I say that loosely. I'm not telling you to do that. That's just my personal opinion right now, because I think there's so much pessimism around the dollar. But in terms of just the cycles, the price action, and the fact that the data points are relatively stable, when I say relatively stable, I mean relative to sort of the, what's the word? Not consensus, but not consensus on calendars. When I say consensus, I mean people seem to be, the general idea between humans seems to be that the dollar is very, very bearish, or the data is really bad, whatever. I like to take a little bit of a counterpoint there. So yeah, I would be quite happy buying dollars at some point. I just need that confirmation that it's a more of a long-term trend, not just a couple of days of buying dollars. Do you know what I mean? Anyway, so Sluggy wants euro pound. We just discussed euro pound, and I was saying it does look okay if we can end up clearing this little sideways range we've got here on the daily, and if we could see euro pound pop back on the bullish EdgeFinder scores. Because right now euro pound sitting at a score of 4, which is neutral, which, you know, for me, that's just a completely no trade. It's completely null. I'm in a euro pound long right now. Hopefully it bounces more. The stronger GBP doesn't help. Well, you're saying that the pound is not having a great day, actually, which is what enabled me to get out of my pound Swiss shorts. But yeah, I think the pound strength and the whole thing about the pounds, was it GDP that came out higher? Let's just take a quick look actually at the fundamentals the heat map for the UK. I'm fairly sure GDP came out higher today. Yes, it did. I don't trust this. Now, when I say I don't trust it, it's not my choice. You know, that it is what it is. It's a data point. So when I say don't trust it, it doesn't mean because this came out higher, I'm going to increase shorts. That's not what I'm trying to say. What I mean by saying that I don't trust it, it means it's not wavered my opinion that the pound will continue lower. And I do think it's very overvalued. And when I say overvalued, again, take that loosely. I don't mean it's overvalued right now. I think I am looking more at a longer term aspect in terms of the UK seems to be heading down a pretty bad path. And I think the price of the pound is just going to continue to reflect that over time. But that idea can change as more data points come out. The government's making more steps and things. So again, don't take that word for word for forever. I'm greeting Cycling Club. I've got no idea what that was even trying to say there, Josh, my friend. I feel like FX has been this way for all of 2025 after Liberation Day. I don't know. I think 2025 was okay. There was some pretty good opportunities last year, actually. Mainly, actually, shorting the dollar. But yeah, there was some good ones last year, but it wasn't at all easy, I would say. Lies, I think James might have been discussing DXY95. That wasn't me. Ball Out was the one that was talking about dollar to 95. I don't know where Ball Out is, actually. I've not seen him in a while. Hope he's all right. 0.3 GDP. Yes, that's right. I love FX. So do I, Alan. Although, actually, G10 FX specifically, I'm sure Alan knows this. I'm not talking to Alan, but for anyone else that is a FX specific trader, G10 currencies are one of the hardest markets to have an edge in. So if you look at the traders that really do make money in these markets, so people, let's just take Nick, for example. Nick's strategy isn't a case of having finding inefficiencies and building algos around that. It might be, for all I'm just talking sort of what I know about Nick. But a lot of G10 FX traders are always trading with the macros. And the reason is because that's really all you can do. Obviously, if you've got a scalping strategy, I'm not saying it doesn't work. You do what you want to do. But I'm just talking very blanket statement here. If you look at like quants on Jane Street, quants at Jane Street, and all of these people are paid hundreds of thousands to write these algos for these large funds. They're not trading FX, or they're not trading G10 FX anyway, because they are so liquid and pretty efficient. It's very difficult to find any type of inefficiencies in these markets. I don't know where I was going with that. Oh yeah, the FX thing. So yeah, I think if you are going to be involved with the G10s, you really have to understand the fundamentals, the macros, central banks, like what's actually moving the markets, rather than it just being a case of finding some pattern to try and exploit. Which is why, actually, I suppose if you look at a lot of the ICT traders, SMC traders, I think that might be why they have more success on the indices markets compared to FX. That's a complete speculation. I don't have anything to back that up, but just a throwaway idea. The UK is over? Maybe. I don't know. We'll see. I think the UK has to make some very specific steps in order to redeem itself. For me, again, I'm talking from my outlook specifically. It could improve over time, but I just don't really see anything there yet. I'm in a different camp. I was in the commodities, but moved back to FX because of how bullish it is. I don't like how I'm not sure what you mean there, Chris. You don't like how parabolic commodities are? Silver H1 pullback when? You know what? If I could tell you that, I would be shorting it with full margin, and I would be very rich by now if I could time every pullback. This might be all you get. As I was saying, it seems like if we look at what what silver's been doing, it's just respecting this 50 moving average, and it's almost identical to what we've seen on gold. Generally, we often have these times where we just move sideways for a little bit and then continue. It might just be a case of we're doing the same thing. We're just testing this 50 moving average before we just continue higher. So this might be it. If you are wanting to buy silver, not financial advice, this very well could be the only pullback we might get for the next 1 to 2 weeks, or the only larger pullback, if you will. FX is extremely liquid and efficient. The best approach is macro. Yes, exactly. Alan knows the source. Algo trader on FX Liberation Day aftermath made me toughen my algos. Took a couple of months. Yes, FX is fantastic. I'm not. I trade FX. By no means am I saying it's a bad asset class to trade. It's phenomenal, but I think you've got to treat it very differently to other markets. So let's take stocks, for example. I think you can sort of dig into what's the word I'm looking for? Inefficiencies in certain stock markets, the way they open, or what? I don't know. I'm not a quant trader. I don't know what they look for exactly. But yeah, I think FX is very different on a micro level. Ace, any thoughts on Australian dollar CAD? To be honest, no. I've got absolutely no interest. I think I would lean towards longs initially, based just on the fact that I'm not very happy with the Canadian dollar. And I think we do have a relatively hawkish RBA. Let me just take a look at the chart for a second. Go 4 hours. Yeah, so we are in a bullish trend right now, although it's not super clean. So I suppose if you were looking to be a buyer, which is kind of the only direction I see right now, it would be a case of just waiting for a retest of this level and then a continuation higher. So we've had the break, so the retest would make sense here. And then again, that continuation 200 moving average comes back up as well. It would also provide a little bit of a reversion back to the mean. And yeah, I think that's all there is. But in terms of the fundamentals, I don't really have anything that would support that other than a slightly hawkish RBA. I mean, gold and silver is moving up without pullbacks. Oh, Chris, yes, I get you. James, if you look at euro pound, flipped, which I would be, pound euro, it's printing a different picture. Is it? I will take your word for that. I don't have access to that chart on my platform, but yeah, fair enough. Too parabolic isn't easy to get an entry. Yes, it is. James Silver isn't giving it pullback. I know. Very sad, isn't it? It's a very sad state of affairs. Do you think America is heading into a civil war? Do you think it will trigger? No, I wouldn't say so. Oh, DAX. Yes, look, we'll look at DAX. In terms of a civil war, I'll be honest, I don't know. I think with things like that, in terms of trying to, hold on, let me find DAX. 1 second. John 40, here we go. Yeah, in terms of looking at things like the Civil War or a civil war and things like that, I think it's not necessarily from a analyst or a trader's perspective. I think you'd really have to be there and sort of experience the day-to-day anger of both sides of people. So like in the UK, I can very easily look at the left and the right or whoever it is and say, yes, you can feel them getting riled up and angry, and you can sort of see it in the streets and all these things. Like in the UK, I can walk down the street and there's flags flying everywhere, which in America might seem quite normal. Over here, it's not. And again, that's relating to the anger around immigration, all those things. In America, I have no idea what's going on in America on a day-to-day basis. All I can do is really look at the data points, and obviously that's not going to tell me about a potential civil war. Anyway. DAX. I don't know. To be honest, I've not really been keeping up with the DAX in terms of a long-term outlook. I'm not seeing anything on the EdgeFinder. Euro seems relatively bullish, but yeah, to be honest, let's have a look at the European heat map and look at the stock impact. 50%. So nothing, in my opinion, that would drive a huge bias. Obviously, then we go to the chart. Really nice uptrend here. Just a note, I've only got a minute and half a minute left, but I'll try and wrap this up. So from a H4 perspective, I'm going to be honest. It seems stretched, and that's always a dangerous thing to say when you're trading. It seems overbought, it seems stretched, blah blah blah. However, I wouldn't be comfortable buying it here, really. I would like to see a pullback, as I always do, as I've been repeating throughout this whole stream. I would need to see a pullback towards the previous highs, break and retest. We've already had the break, so the retest, then continuation higher. It would also give, again, that mean reversion back to the 200 moving average, which would be quite nice. But yeah, buying here just seems a little bit dangerous, in my opinion. It just... Nick says it really well, actually, the buy high and sell even higher, or whatever it was. I agree with that, because obviously that's how you basically trade trends and momentum. But in this specific case, after such a large move, I think the move's already happened. You would really need to wait for a pullback rather than looking to just buy this very minor downside. My opinion, again, trade it as you please, but not for me. Australian dollar yen. Yeah, I'm Interesting. Right. Okay. I'll try and cover that very quickly before I head off. The Australian dollar yen, overall, I would say quite bullish. I have a bullish bias, but I would be cautious of the fact that we have the MOF potential intervention. I'm not dead set that's going to happen anytime soon. It could happen towards 165 on dollar yen. That's kind of where I'd start really thinking we're going to see one. Until then, not overly certain, but yeah, I would just take caution with yen pairs. Aizen, hello. Anyway, ladies and gentlemen, I'm going to head off. It's been fantastic speaking to you all. Hope you all stay safe and well. I'll see you all tomorrow. Don't get margin called. And yeah, enjoy the rest of your days. Thank you for having me.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, how you guys doing? I thought it was Friday, but it's actually Thursday. But yeah, super excited to be here. We are actually starting to get some movements here in currency land where I operate. And just to James' point, I love Forex. Actually, I love it so much. I can just talk about it all day long. So we're starting to get some movement here. We did see jobless claims actually do better than expected. So we got a lower number, which is good. Less people filing for unemployment. So the job market is holding up in this environment where borrowing cost is, slightly elevated here. So that gave the DXY a bit of a boost. And so one thing that I had in mind, so whenever we had that NFP, we all remember the NFP. The DXY was actually at the crosshair of the 200-day and the 50-day moving average. And I made a video and I basically said, the direction could be influenced as to, what happens after that. So we were kind of stalling out here. And then, that kind of theme was taken away. And so moving forward, we have the Supreme Court thing that's still up in the air. To be quite honest with you, I don't have a definite direction as to where things can go from there. I'm going to just, seek the guidance of the market and see how it's interpreted in the price action as far as the momentum and things like that. But we are now above that 200-day and 50-day moving average. And we are seeing some signs of slight improvement in the job market, perhaps giving the Fed a little bit more time to hold rates if necessary, right? Because our inflation is still above target of 2%. Right now it's at 2.7. And so one of the things that I have on my mind here, if I just put a Fibonacci retracement level from this low to high, putting myself in the shoes of a dollar bear, right? So, we all know that dollar has been trading lower here, as you can just clearly see, lower, lower, lower. And now we are starting to see somewhat of a flip here. And so if I'm a dollar bear, I'm looking for a retracement to go ahead and enter short. So where could I be entering? This 38.2, the 50. Ultimately, the best price, right? If I'm looking for a premium to short, will be that 61.8% retracement level. So we are at that level now. So if I'm a dollar bear, this is technically my last line of defense, right? If we continue to break higher than this, then technically speaking, right, the path of least resistance is to drift higher. And obviously the next target here would be the top end of this channel. If I just zoom out here at this 100 handle, 105. So that's what I'm thinking, right? So I am positioned in that way. I have we all know the dollar Swiss position that I've been in, collecting positive swap. It's actually paying profit on top of the swap. So that's a good thing. As far as exit points, so if the dollar index does go ahead and hold this 61.8% retracement level and it starts to turn over, then I'll just go ahead and manually close out the position. If it continues higher, then obviously I will seek to take profits on that dollar Swiss position once we get up into here, this 100 handle. And so that's kind of what's on top of my mind here at the moment. Another thing on the dollar Swiss chart is that we are going to be approaching that 200-day moving average. So we do have the alert here on the chart there. So also monitor that as well. I do have a pound short position. It's now below that 200-day moving average. So this is just a matter of trailing stops. And then if I look for profit taking levels, same idea as the DXY, right? If I'm putting myself in the position of a pound dollar bull, then I'm looking to, see, the 38.2, the 50, and the 61.8. So that's pretty much how I'm navigating markets here. But near term, if we do fail to hold that 61.8, then dollar will most likely just drift higher here. But we still have one thing that's up in the air, and that's, of course, the Supreme Court decision. It was supposed to come out, I believe, what was it, Friday, and then it got pushed to yesterday. Yesterday didn't happen, so it's getting pushed out further. So that can happen at any moment now. And then as far as the reaction behind that, I'm transparently unsure on how that will play out there. So that's kind of my thought process here. Someone in the Discord mentioned, hello everyone, good to see you guys saying hello. Someone mentioned if I still like the Aussie dollar long position that I keep talking about, and the answer to that in short is yes. So I have been saying that I actually would like a short-term bump in the dollar so I can get a pullback opportunity in the Aussie. So this is actually working out in my favor. In the short term, my dollar long positions are working out. However, medium to long term, I'm looking to actually short the dollar, right? Because you don't want to fight the Fed, right? We all know that the Federal Reserve is looking to cut at least twice. I think another member said 3 times. What was it? Yesterday I saw on Financial Juice. But point blank saying the Fed is looking to cut interest rates, right? So you don't want to fight that. The RBA on the flip side is looking to hike their interest rate so that, opposite ends of the spectrum there as far as that interest rate relationship is actually going to be good for Aussie dollar in the medium to long term. So I'm looking to go ahead and continue seeing this dollar shrink. That way I can go ahead and get a more discounted level on the Aussie. One thing I have been seeing, though, I've been noticing is that the Aussie is showing some relative strength compared to its other major currency pairs, right? So if I just go here, just so I can showcase it here for you guys, currency strength, go today, the Aussie is in blue. It's at the top of that list, right? So the Aussie dollar is holding up compared to everyone else. Now, you can obviously see that if you just look here on the right hand of my chart, Aussie dollar is still green on the day while most everyone else is red on the day. So that kind of tells me that maybe this level will be the level for me. Ideally, if we continue to see that continuation in the dollar rallying, then I would love to wait for a pullback deeper into that 50-day moving average, that 50% retracement level here, that 6,600 level. If we don't get that, the dollar ends up here, and this is just the best thing I can get, then I would take it cautiously. Because it's not the best entry point, in my opinion, because I ultimately wanted a lower price, what I will most likely end up doing, it's something I do all the time with currencies, is that I just take a smaller position size and I am open to adding to it right here, right? You don't want to go, all in or whatever, or your original size at a premium level, right? You want to wait for a discounted level. So I'm probably going to take half a size and then go ahead and be open to adding more at that 50 moving average. And then ultimately that would just bring my average cost basis. It'll improve it slightly, not the best, but it will improve it slightly. So in short, yes, I do still think that the Aussie dollar is set to chug higher here going into Q2 of 2026. And that's going to still be on my radar, right? So although we are getting this dollar bullishness, it doesn't mean that dollar is going to continue rallying forever, right? It's good. There's at some point, there's going to be a turning point. Something's going to happen. And that's why I absolutely love currencies. A lot of people hate on currencies because they say it's really, really slow and stuff like that. And I agree. For the most part, it is very, very much slow. But the beauty is if you're monitoring it for long enough, you get into a rhythm, you know exactly what's going on in every single major economy, and you know what to look out for, right? For example, the things that come top of mind, you have the UK, they have their budget going on, right? They have some gaps to fill. Are they gonna, do it via taxes or whatever? So that's what I know with the UK. Then you have Japan, right? You have a depreciating yen. You have people trying to hike rates. Then you have the Takaichi trade stuff like that, right? And then you have the US, you have the Supreme Court, you have tariffs, this and that. You get to a point where you know what's going on in every single major economy. right? You know where the state of every major economy. And then whenever you see a new piece of info, you can just attach it to what's going on, and you can say, this is actually going to improve or worsen what's going on. And that's when you can catch these bigger moves in FX. But if you're on a day-to-day basis trying to intraday or scalp it, you will most likely get chopped around because FX moves in one go, right? If you think of one of my best trades in 2025 summer, the French snap election. Right off the rip, it was Sunday night. They called snap election. The euro gaps down and has so much follow through, right? Then you have the beginning of January. You have the tariffs, Canada, Mexico, China, 25%. So dollar Canadian was in play for me. Then you had fast forward a couple months. Then you have that $600 billion euro military spending, all that good stuff, pump the euro up like what was it, 1,000 pips, 700 pips, things like that. If you're in tune with the markets and things, you can really get a grasp and catch these big movers. So to those that say FX is very quiet, it is very quiet on a very short-term intraday basis. But if you're swing trading it, align with the macro, you can get these hits of like the headlines that work in your favor, and then it becomes worthwhile. So yeah, I'll go ahead and start answering the questions here. I know I kind of went on a tangent. Hey, Alan, which moving averages do I use? I use the 50-day and the 200-day. I use them with a grain of salt, so it's not like I trade or make trading decisions based off of them. They're more so of just levels. Like, for example, this Aussie dollar position, this 50% retracement level lines up with that 50-day moving average. So to me, that support level becomes a little bit more concrete, you could say, but it's not definitive, right? Let's see what look at oil chart. I'll definitely look at oil charts. Do you trade prop firms? If so, which ones? Were the pros and the cons of payouts? I don't trade any prop firms. Everything I do is personal capital. So I can't really speak too much on that. But if you're interested in the prop firm things, and A1 Trading does have lots of offers for you. You can also get discounts as well. So perhaps they can drop the link to the chat to the prop firms, and you can just explore whichever one makes the most sense for you. Let's see. I also love trading currency because they're slow moving. Yeah, there's benefits, man. Like, for example, December slow month really I'm hesitating because ball out. I got a haircut yesterday, man. But I'm growing it out, so that's why it doesn't look so significant. So yeah, just got one. So yeah, so to your point, currencies moving slow can actually be a benefit as well, right? So the basis behind entering this dollar Swiss position was because I was collecting positive swaps. So December notoriously is a very slow month in currency world. So what I basically did was I bought dollar Swiss here, and I was going to buy it here, but I hesitated there because we were kind of stalling out there. I didn't get the quick reaction like before. However, I bought it here, and I've been collecting positive swaps since. It's been like a month and some change. So that's been helping out a little bit. And now the trade is actually in profit as well. So I'm going to actually get the profit from the position plus positive swap. So currencies, you can trade it either which way. You can be very active and trading macro, which I do, right? I wait for these polarizing sentiments and things like that to kind of add to my trade ideas. But then you can also take advantage of the swap aspect. If you pick your currency pairs correctly, you can be paid daily income for participating, right? So, and that will ultimately help with bringing down your operating costs, like your commissions, things like that, or any losses that you incur. It's not gonna, the swaps are not significant enough to go ahead and just wipe out all the losses. I'll be transparent, but it does bring it down some, right? So that's always helpful. Do you speak Spanish? Thanks for an analysis. Yes, I do speak Spanish. I'm Mexican and Salvadorian. I use the same 50 and 200 day, the same way in confluence. Yep. Yeah. The 50 day is good for like I would say like swing trades for like a couple days. The 200 day is like really like a strong level support that most people pay attention to, that 200 day moving average, right? So yeah, that's how I use it. Okay, someone asked me about oil too, so I'll definitely remember to go back on that, and then silver as well. Let's look at silver first, right? Because that's what everyone's on top of mind. Yeah, I mean, I've noticed in the comments, right? on the live stream where people are like, silver's dumping. It's not dumping. It's at the 90 handle. We were, just a couple of days ago, we were in the 50s, right? So it's definitely not dumping. If you put this thing on a 5-minute chart, sure, it'll look like it's dumping, but it's really not. I don't even know how to do this. Yeah, so it's still elevated. You're paying a premium if you're buying it now. One thing that I always do, and I don't advise doing this with silver, because the relationship or the thing with metals and equities as well is that their long-term direction is to the upside. So what I'm about to say makes a lot of sense for currencies, not so much for assets that tend to drift up higher. But whenever you get a very overcrowded trade, that's where the risk of downside or the risk of reversal is very high. So in currencies, like, another thing why I got into dollar Swiss was, one, technically good level, right? Discounted level relative to where we've been. But also the dollar bearish trade has been so overcrowded for so long. And the thing with currencies is that they're mean reverting. So actually, the more time that you're in the trade, the more at risk you are of it going against you or taking you back to break even. So when I see like overcrowded positioning in currency world, I take that as a good sign, and I approach it very safely. Can't really say the same thing about metals and equities because they tend to drift up higher here. But one thing we can all agree on probably is that it's a very overcrowded trade. So buying it here at the premium, I wouldn't say is like a wise decision unless you're like extremely long term, like you got decades, you're a long-term investor, then of course it makes sense, right? Because that means that you've been dollar cost averaging, and then your actually average price is not the best. But if you're gonna full port this thing right here because you want to just catch the high, so if you want to buy it here and then just try to get the high here, sure, but then you have all of this risk behind you, so not advisable. As far as my thoughts and directions, like, should you buy silver, short silver? Don't have one. Oil, let's see what oil happened. See. So speaking of the 200-day moving average, and I actually didn't get alerted, which is interesting. I literally missed it by a hair. Do you guys see that? Do we all hate that when you have orders and alerts and then you just get missed by a fraction of a hair? Anyway, hits the 200-day moving average, which, as we all know, is a very respected technical indicator, you could say. And we're now kind of holding back here. So I think actually the risk with oil was priced in, the supply shock risk, if there was going to be any. And so now we're back here. I think oil fades off a little bit. I don't think it's going to stay elevated for too long, and that'll, of course, help the inflation story and all that good stuff. So if we actually see the confluence of oil staying, pressured lower, and then the DXY hits at this level here, I think that'd be a good time to short the DXY. Once we get into that 100 handle, you're getting into a level of resistance. Oil's staying lower for some time. I think the stat is we've had the lowest oil, or the price of oil has been the lowest in like a couple years, right? So that's definitely helping the inflation story. So yeah, I'm definitely looking to short dollar crosses right at this 100 handle if oil continues to stay subdued and this whole tariff thing stays behind us. I think that's a good idea. What is my vertical PR? Like how high do I jump? Not for, man. Not for him. I'm not an athlete. Yeah, Alan, ain't silver's not getting a pullback. Yeah, I agree. But it's risky, right? It's risky because you could bet for a steep drop, but this thing has a lot of momentum. It's really risky. If you have a trade on it already, then just trade your plan and let it be. But if you don't have a trade on, now is not the time to get in. You missed it. It's over. Hey, Alan, DXY is moving up, but USD JPY is selling. Can you tell us why this is so? Probably behind the risk of intervention, right? So maybe people hesitating on the dollar yen. So dollar yen is elevated, right? Of course, I wouldn't say it's selling off. We're still up on the day. If you actually look at the price of dollar yen versus others, right? Like dollar yen has been really, really appreciating. If you look at dollar Swiss, it's catching up as well. Dollar CAD as well. But dollar yen has really had in the past, has really moved faster than the others, and now it's just stalling out. So I think it's just a matter of playing catch up. But as far as why it's not continuing its aggressive upward rally, I think people are now being hesitant at buying at these premium levels, similar to silver, right? I'll give the same approach to silver. It's really high. You're paying a premium. Your upside is somewhat capped because you have intervention risk, and your downside is almost, or it's not infinite, but it's very significant. So it doesn't make that much sense to go ahead and add on to new positions to dollar yen here at these highs, because you have that risk of Bank of Japan. They're wanting to hike the rates. They've been more verbal recently. So in more frequency, they've been voicing that, yeah, we're getting to a point where we're looking to intervene. I did make a Telegram post not too long ago, it was about 3 days ago, beginning of the week, basically saying that the Bank of Japan doesn't have a level in mind as far as where they're willing to intervene. They could intervene now, they could intervene at 162. What they're looking for is speed of depreciation. So if you get a quick run up here, and this is actually a good example, this was the last time they intervened, right? Quick run up here in the yen, or in the dollar yen here. Quick. We only had like a couple of red candles in there, but the speed of depreciation was really, really fast. We're seeing somewhat of a similar situation here, right? So if you just reference, here, I want to visualize this really good for you guys, so you know what I'm talking about. I've noticed that I move my chart a lot, but if you see here, quick run up here, dollar yen, and if you look at this, does that not look similar to you? Right? So we're seeing some similar characteristics there. Bank of Japan is looking for speed of depreciation. If you get, a lot of that going on really, really fast, day after day after day, then that's when it's probable that they go ahead and intervene. So that's probably why dollar yen is actually hesitating to continue higher, is that risk is very prevalent. At least gas will stay cheap at the pump. Yeah, I saw a video that someone, I forget where it was, what county, but I think it was like at $1. I don't know if it was real or not, but yeah, euro US dollar. Yeah, I know you guys are asking for that one. Let me go ahead and delete all these. These are old. Euro US dollar here meeting up at that 200-day moving average, so that'll be a very pivotal support level. If I put a Fibonacci, low to high, yeah, it's at the 200-day and the 61.8. So maybe if that DXY fails to break lower or break higher, then this thing will find support here. But if it doesn't, next level of support, technically speaking, and technicals are very subjective, so take this with a grain of salt. What I might think is a support, you think it's something else. So yeah, something like this, I would say. But that's kind of far out. I don't know if euro gets that far down, but this will be another level of support. So if you want to trade along that, cool. If not, be my guest. But this is not an active trade. I'm already in position, so I'm not actively looking to put on new positions. If I were to go long anything against the dollar, it's going to be the Aussie. The euro, they're done cutting rates. The relationship between the two, like, it's not so much opposite. It's not so polarizing. So I really wouldn't touch the euro at the moment, really. I mean, shorting it to the downside would have been nice, but it's too late. So if you have a position on, great. If not, I'd stay away from the euro. I think there's better assets to go ahead and trade Forex on. Let's see here. What else? But yeah, one thing I would say though, join the Telegram. I'm curious to see how many people are in it. I'd like some real-time feedback, if I could, from the chat. How many of you guys are in the Telegram? How many of you guys like it? Is there any other improvements we could be doing, or I could be doing? And if you're not in the Telegram channel, definitely go ahead and join the it's free, man. It's free stuff. Like everything I just talked about as far as the pound pulling back, what's going on, right? The UK, GDP, all that good stuff. I just talked about it as far as the technical levels of the DXY, all that good stuff. I talked about it there. So even if I'm not on stream, you can still get my analysis every single day. I tend to not take a day off. Like, I love doing this stuff. This is very fun for me, and it's actually good for me as well because it forces me to always be, you know, looking at what's going on in the world. So it's benefiting everyone. It's free value. Definitely join. Here, I'll drop the link in the chat for you guys as well. So Max is in, Sluggy's in. Yeah, well, I'd love to know, you know, how you guys feel about it and see how we can improve. And if you're not in it, definitely join. It's completely free. I drop quizzes as well at the end of the day, so to keep you guys sharp. And then Nick always drops free bonus content. It's really, really good. Julie also does a good job here putting, you know, promotions and things like that for you guys. So you guys are always getting discounts on things like prop firms and all that good stuff. And there's also going to be a EdgeFinder giveaway as well. So definitely participate. You can get a free EdgeFinder. And if you don't get the free EdgeFinder, just buy it instead, man. Just buy it. It's going to pay for itself. This thing has paid for itself. Like within months that I bought it, it paid for itself. So it's definitely going to help you out in your trading. You're not just buying the software, but you're also, you know, you're getting the community behind it, and we all really care. Like everyone at A1 Trading is phenomenal. I've met them in person. They're great. So you guys are in good hands. If you're serious about your trading and you want to elevate it and improve, then take that step and buy the EdgeFinder. It'll definitely help you out. I'm in and I'm loving it. Great information. That's good to know, man. That's good to know. You always read your analysis and sometimes answer the market closure question. Thank you, sir. I will say one thing about the Telegram channel that I've noticed, you guys are pretty smart. Sometimes I try my best to like put trick words or things in the questions, and you guys do very well. So I think I need to revamp and make it a lot harder because you guys are very, very good in there, but also want to make it friendly for beginners as well. So I'll probably do a mix of both. It's pretty good and insightful. You love it? It's good, man. It's good to know. Good insight and good to read. Already got the EdgeFinder? You got it, man. I promise you, I'm not just saying this. I say this as a person that was doing it too. You get the EdgeFinder and you just follow whoever. It doesn't have to be me, but let's say your trading style is like Marco or Nick or Chris or whoever, but follow someone that resonates with you within the community. Use the products and just show up every day. I promise you that your trading will improve. Like it's impossible for it not to improve. We're traders, of course. We are smart. Yeah, man. You guys really show up sometimes. I'm telling you. Sometimes the questions will be like 90% right. I'm like, bro, what was I doing? Like, I need to make this harder. And then I try to make it hard. What's your annual return last year? 38%. 38%. I'll make a video. I'm actually going to make a video talking about, you know, my approach to FX, how it worked out for me, because I do see the comments that FX is dead or it doesn't move as much. And I know a lot of people really gravitate towards like futures and stocks, and because they move faster and sure they're more active in the lower time frames intraday thing. And I can't dispute that. That's absolutely correct. But I think FX is a great vehicle to trade, right? Especially if you have like a busy lifestyle, if you have things to do, if you have a job or whatever. FX is awesome for swing trading, in my opinion. It's awesome for swing trading. So I'm gonna make a video basically going over my last year. I'll put like my results. Like maybe I'll do broker statements if I just blur out the right things. But yeah, I'll go over it all, and I'll also show like, you know, my process for picking out trades, because last year was a year of headlines. Every quarter there was a headline. There was some kind of risk on, risk off thing, transition. So I want to make a video more in depth, and I'll publish it, and then you'll see everything. They're Googling the answers. Come on, you guys can't Google the answers. If you Google the answers, you have to write down like the reason behind it and everything, so it sticks. You don't want to just Google the answer it, and then you leave it behind. You gotta, you know, put some intention behind it. But yeah, guys, that's the end of my session. It was always a pleasure being here. So thank you guys so much for watching. Trade safely, guys. There's some risk, right? We have the risk of the Supreme Court and whatnot. So trade safely, have a best rest of your day. And as always, I'll see you guys tomorrow. Bye-bye, everyone.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.